an event awaited by all of us with bated breath and anticipation. HerMoneyTalks, India's first one non-stop financial platform for women, in partnership with BSE Limited, brings to you the first of its kind virtual summit, which brings together women from diverse professions and with diverse interests. This virtual summit for women has but one aim: to inspire and help women take active interest in personal finance and make informed investments. Femvest 2021, brought to you by Her Money Talks, and BSC symbolizes new hope, new possibilities, and a new beginning for women, not only for the new year, but also for their journey of financial empowerment. Over the next 7 days, prepare to be dazzled by thought-provoking talks, be captivated by some riveting panel discussions, and dare to be different and be enthralled by some very engaging investor education sessions we have curated just for you. Without further ado, we would like to announce the opening of this groundbreaking event, Femvest 2021. Welcome all once again. I would first like to welcome Ms. Nisari Mahesh, the founder and chief executive officer of Her Money Talks, to say a few words by way of a welcome address.
A very warm good afternoon to everyone present here. It is an exciting moment for us at Her Money Talks to organize this first of its kind virtual summit. With great pleasure, let me take this time to extend a warm welcome to Femvest 2021 and walk you through what is it about, what it means to you, and what does the future hold for all of us in the context and theme of this event. Femvest 2021 is an official kickstart of a Finlit mission Her Money Talks is embarking upon, a goal of reaching to 1 lakh women in 2021, helping them achieve financial literacy, build confidence, and the ability to take financial decisions independently. On this occasion, let me officially announce our Finlit Mission 2021 and look forward to your continued support in this journey. The agenda of Finlit Mission 2021 is to spread financial literacy for women through awareness workshops and webinars in every possible spaces throughout the length and breadth of India, like in colleges, corporate, women organizations, co-working spaces, startup platforms, and NGOs. When the whole world see the glass half empty during the pandemic, we at Her Money Talks like to see the half full. The pandemic actually made us closer to technology with a lot of possibilities opening up, making our life easy and through conveniences which we had ignored in the past. This is especially true in connecting with people anywhere and everywhere. Even this event, if it is offline, would have been open to a very few of you, but today we are feeling really excited to have you all here in one platform and watching us live. Coming to the aspect of financial literacy for women, it is the very heart of what we do at Her Money Talks. And I would like to make a few remarks here as a woman and an observer and an ex-banker. It is very interesting to note that girl students, they consistently outperform boys in quantitative subjects in the academics. But by the time they leave the campus and enter the industry, their involvement with numbers just fade away. Women have a hesitation to talk about numbers. We feel we don't understand the jargons. We lack confidence in talking with conviction about finance. And there are a lot of people who end up taking wrong decisions. We talk about women empowerment everywhere, but we think we need to be provided for. Societal conditioning, of course, but the consequences are vast and it is time for a change. So I would like to take you through some interesting facts for this. According to DSP Winvestor Pulse 2019 survey, it is just 33% of women make independent investments. According to another study by Global Financial Literacy Excellence study, it is just 20% of women have understood the financial concepts. The World Economic Forum report of 2018 says the gender gap in economic participation in India is just 66%. India is traditionally known for its traders and the enterprises, but the women entrepreneurs here are just 14 to 15% of our population. And this is the number we at HerMoneyTalks are looking. There are 300 million women in India who needs financial empowerment. An interesting twist to this is that if you look at worldwide, women control more than $216 trillion wealth globally. Globally, if you take women influence 80% of the domestic buying decisions, but still, why are we lacking decision-making in investments? We have the power in our hands, but somewhere we are failing. The reasons are many, but it's time to take the responsibility on ourselves. I've been talking about this to one of the panelists in the event earlier, Rita, she's today. I heard from her the same thoughts I have. Surprisingly, women of higher socioeconomic classes are reluctant to look at their personal finances, whereas the rural India, we see a lot of women savers, women who is actively taking charge of their family finances. That was a very interesting fact, actually. And a testimony to this fact is that women micro entrepreneurs in the rural is about 78% of the total number of borrowers under government's Mudra scheme. So what can be the reason? So to know that, stay tuned to our interesting panel discussions in the coming days to take a deep dive into this. So as a response to some of the queries as I have been receiving in social media and based on my discussions with others, please note, we are not a feminist movement. We are not politicizing finance. And it is not just another women helping women platform. We have a lot of male supporters for HerMoneyTalks, which is a testimony to the fact that women empowerment is the need of the hour for the society, for the families. And it's not just another movement, a Me Too movement. And it is not the need of one gender. Now, let's see the economic impact of achieving gender equality in India. I just came across a UN report in India that the report says that India has a lower share of women's contribution to the GDP, which is just 17%, when the global average is 37%. The IMF estimates equal participation of women in the workforce will increase India's GDP by 27%. So let's see what difference it can bring when we women take charge of our finances. At HerMoneyTalks, we built a robust ecosystem in India, leveraging the digital possibilities to bridge the gap between financial institutions and women. Our Femvest 2021 and our financial literacy mission is an attempt to make a change in this. It is with tremendous pleasure that I welcome all panelists of the day. Most of them, actually, they will be joining during their particular time slots only. Still, I extend a warm welcome to everyone as part of the duty which I am assigned to. I welcome Lakshmi Iyer, President, CIO, Debt and Products, Kotak Asset Management Company Limited. Let me welcome Jaya Janardhanan. I guess she will not be joining. She just informed due to some unforeseen situation. But in case she is able to make up, Jaya, I welcome you. Jaya is the CEO of Indostar Capital Finance Limited. Welcoming Rita Nath Chaudhary, Process Transformation Consultant and Mentor, ex-Senior VP, Bank of America. I welcome Ganesh Ram, Head of Mutual Funds, BSE India. BSE being the event partner, Ganesh is also co-host of the event, so I don't need to invite him, but still as a formality, I'm inviting Ganesh. I welcome all my colleagues at HerMoneyTalks, all members of HerMoneyTalks community, representatives from our channel partners, well-wishers, mentors, ecosystem partners, organizers, sponsors, and everyone who's watching us now here. A warm welcome to each and every one of you to Femvest 2021. Looking forward to see you everyone out there in all these 7 days, same time, 4 p.m. to 6 p.m. Once again, thank you to each and everyone for being here with us today. Thank you, and over to Sneha.
Thank you, Ms. Nisari. That's a fantastic tone for Femvest 2021 and our journey for financial empowerment. As we kick off with the exciting talks lined up for the day, I request the audience to share their questions, if any, in the chat below, and that will be addressed in the Q&A session. Stock markets tend to be seen as where stocks brokers work. It is often believed by common investors as something that is disconnected from our daily lives, especially when it comes to our stock markets and capital markets, especially when it comes to financial empowerment. Nothing could be further from the truth. Stock markets and capital markets are where wealth is created. And where there is a wealth creation, there is security, there is financial empowerment. To address us on this topic, I would now like to call upon Mr. Ganesh Ram, Head of Mutual Fund, BSE India. Mr. Ganesh has more than 20 years of experience in financial services and capital markets, process transformation, and investment banking. A certified Six Sigma Black Belt with an MBA from Symbiosis, his corporate career includes stints at Bank of America, Merrill Lynch India, and Fintech. I request Mr. Ganesh to join us on stage to speak us on this topic, capital markets, destructive drivers of financial empowerment.
Thank you so much, Neha, and good evening, everyone. And first of all, congratulations to HerMoneyTalks. I still remember when they kind of came back to us to kind of start this woman empowerment kind of videos. I never thought it will be much bigger, right? And thanks for them. Through HerMoneyTalks, I think I able to reach out to a lot of leaders who inspires me. One leaders, one is Nitarnath Chaudhary, who is there, who was my super boss, able to connect and talk. So I think these are all opportunities you created. Then I myself realized just to kind of give an audience feel. Last year, BSC Star MF did a Star Woman program where we realized the number of women distributors in India, mutual fund distributor advisors, has crossed 1,000. Okay, which was a landmark figure. We never realized that over the period of time, but then it was a very small number, probably in single digit, but they phenomenally grow. So we did an event last December. In 2019, in fact, not even last year. So we always recognize woman can really make a huge difference in financial markets specifically. So my topic is quite, I think, handpicked by HerMoneyTalks, so which talks about the disruptive drivers of financial empowerment, which is quite interesting. So let's see. Can you just go on to my presentation, please? Next slide, please. So yeah, the first thing which I put together is to also understand the global picture. I think United Nations along with PwC did some study on how this financial empowerment can be done. So there was a quite exhaustive list. I just kind of picked few things. The first point is obviously access to financial services will enhance livelihood. I think not only in India, I think globally the very, very clear message is if you can able to empower and get more hands-on to financial services, obviously it's going to definitely enhance livelihood. Next one. Income inequality can be curbed with resilient financial system. Obviously the inequality which is a kind of global theme. I think that can be really reduced by introducing this financial system and empowering that. The next point is self-help group. I think the PwC recommended to United Nations to start a self-help group and women who will be looped in to creating more ownership or creating more footprint of this financial thing. Which I think the reason I kind of highlighted this in bold and blue is exactly what HerMoneyTalks does it. I'm very glad they did it. And the other thing which is very clearly comes out of the PwC report is excluding poor from formal financial system weakens the overall economic growth. So even if you look at the Indian mutual fund industry, there are even 500 rupees, even 100 rupees monthly savings. So 100 rupees is something people can do. But how we kind of be able to bring those people into this economic growth is something which is going to be a huge, huge growth factor for our industry. Next point. And how we can able to enhance the fast and easy access to credit. So which can be done through financial services that can facilitate. Today, if you look at in the last 2-3 years, at least in capital market industry, the number of innovations, the number of platforms, digital platform, including applications, so-called apps, close to 200 more than apps or innovative products are there in the market, which all happened in the last 2 years, which is quite phenomenal. The last point, please. And micro loans will also help this goal. So overall, these 6 points is talking about how we can able to. This is probably set by United Nations along with PwC, but it's not different from what you want to do it in India. I think in India it's very much clear. I think these 6 points definitely fits perfectly for India, and thanks to the government also they're pushing so much. Having said that, in the next slide, we'll kind of see how much is the deep gap we have today. If you actually look at this slide, this is as of October 2020. But if you get the last point where the mutual fund investors are just 2 crores, they just crossed 2.1 as of today. But if you look at the registered taxpayers itself is 8.5 crores. Insurance obviously has more, and because of the health and motor insurance and all those stuff. But the PAN card holders are around 42 crores. So bank account holder is 75 crores. So there is a huge gap in capital market. Even if you look at the stock broking or even the equity market, I don't think it will be more than 4 crores of investors what we have in India. So even if you want to bridge the gap between the registered taxpayers and capital market investment, that is double the growth. So how this can be achieved? This can be definitely be achieved by forming the self-help group and formation like HerMoneyTalks. And obviously, out of this 2 crores, even if you argue there are some 30-40 lakh women who are invested, but those guys are dependent on their male dependent, which could be a husband or father, but they don't take a self-initiative. They probably they save it, but they don't kind of come into the capital market. So that's where there is a huge, huge dent. This 2 crores is mostly male-dominated investors, I would say. I can probably take 30-40 lakhs out of it. Then if you put the taxpayers against that, that's a huge, huge difference. So the difference we can make, or probably self-help group like HerMoneyTalks can do, it's quite large. So how we are going to capture this is something we need to focus on. Next slide, please. Yeah, sorry for cluttering this message, but this slide. But there are 6 major disruptive themes, what we believe. The one is a streamlined infrastructure. Today, if you look at BSE, NSE, there's a lot of apps, individual companies which are coming in, so-called Fintechs, right? So there's going to be a streamlined infrastructure which will be offered. It is convenience. Today, a lot of people, youngsters, start investing in capital market or mutual fund. One of the biggest reasons when we talk to them, they talk about the infrastructure which is available. There's a lot of apps. While traveling or at home, the Wi-Fi is there, the connectivity is there. All they need an app. So they kind of invest. So streamlined infrastructure is going to be one major thing. And automation of high-value activities. Today, if you look at your KYC, your transaction, or your payment, client services, your statements, everything is kind of automated, right? So going forward, there's not going to be a manual activity. Most of these are going to be automated for you. Even today, you have mandates, bank mandates, where you can set up your payment on a specific month. So that's specific dates. So this is going to be a big mover for us. The other one is a reduced intermediation. When I say intermediation, I'm talking about brokers, advisors in the industry. As even we have a robo advisory growing up in India, but we do have something called DIY, which is do it yourself. So individual guys, kind of start their own capital market investment without even waiting for a broker or financial advisor to do it. That's because a lot of data is available today. Even in that, there's robo advisory which is available. You kind of speak to someone as a virtual advisor who kind of gives you advice. And there are some system which always tells you what need to be done, what not to be done. Okay. And the other one is the strategic role of data. India, predominantly never had a data-centric approach. For example, I'll talk about Western countries. You would have heard Morningstar or other big guys. They offer a lot of data. There is a specific investor community which will subscribe to those data, and then based on the data they will do. But in India, what happens is these data are freely available. So you will see an investor logging into Value Research or Google and say, can I invest in mutual fund? So whatever the Google says, he will do. But the database decision is something which is India need to grow, mature, and that is going to be a big win or disruptive even for us as a BSE. We are also working with some large data providers like Morningstar to see how we can provide data to the investor so they can take a decision based on data. And niche and special products. Today we have platforms which offer mutual fund, stock broking. You can buy gold online. You can do insurance. Then you can buy a corporate FD. So this is going to be another specialty. Even at BSE, we are also kind of coming with some special products where we are seeing any investor or distributor or advisor logs into any platform, they might be able to do multiple products. It's not going to be only one product. Like you walk into a bank, you normally get to do a insurance if the bank has an insurance arm, or you do a fixed deposit or savings recurring deposit. But we are kind of going away where we are also onboarding banks to also to be a mutual fund or stock broking distributors. And the last one is customer empowerment. I think the word customer is getting to a kind of prosumer, which means the customer will take the decision when he wants to invest, what he wants to invest, and he will be empowered with the data, availability of technology, availability of his own portfolio, a lot of capital market AMC schemes which are available for gold. So imagine down 5 years, you want to travel or you want to have your education for your kids. You have a goal, and based on that, the system is going to tell you how much you need to invest, right? So these are the 6 things which we believe is going to be a major disruption, which will also enable huge financial empowerment in the country. Next slide, please. Yeah, particularly for Indian capital market, as I told, e-advisory and robotics. So a lot of apps, a lot of automated system, virtual advisory is going to come in. So where you will interact with the virtual person, there will be a lot of data they will publish. And algo trading and AI, based on your spending, okay, you give access for them to your bank accounts or you give access to them to your SMS. So the system reads and says what kind of transaction you need to do. Right? So that's going to be based on the customer behavior. The next one, multi-product platform. As I told you, you don't need to kind of log into multiple platforms or go to multiple places. One platform will offer you multiple investment products. Accessibility and convenience, to an app sitting at having a data connection, you can kind of do everything, not only doing transactions, but also the client services. And the last one, obviously, last but not least, the regulatory pressure. I think there's a lot of regulatory pressure we are going through. One thing people need to understand is, capital market and mutual fund is the most regulated product, more than even banking industry as of today. So these are those 5 major key drivers, which I think is going to drive the Indian capital market in the next few years. As a takeaway, accessibility, innovations, and fintech will make a huge difference and disruption to the capital markets. Next slide, please. And the last one is, this is something what PwC has analyzed for Indian industry. So how we are going to do not only this self-help group like HerMoneyTalks is going to help, but like incorporation of eKYC. Recently, if you look at SEBI as a regulator, has allowed electronic KYC, which is really beneficial, and particularly during this pandemic situation, where an investor or a distributor can do the KYC sitting at his home. And then instant money transfer. So where the payment, there is a special group which as regulators created to see how we can able to ensure the money transfers can be done. One of the outcome is your NEFT, RTGS, IMPS are all now 24/7 available. That is so at any point of time in a day, you can kind of do a payment. How we can use the alternative database for customer onboarding. So how you can use the credit repayment history, the loan history, of customers. So for example, if you have a demat account, you can take a loan against it, right? So that's going to be another important thing. And then smart villages. Recently we did a program, or we're going to do a program with Jammu and Kashmir government, where they want to convert a lot of their local talent into a mutual fund distributor. So want to give a self empowerment or self job, right, for them. So that's what they are allowing. So, and there is a lot of banks which is getting enabled, rural banks and all. And then bank on bike is another initiative which I saw in RBI's vision. But they want to have a mobilized banking, not really a physical office, but to kind of have a mobilized banking, which will go across to the rural areas and do it. An initiative of a known frills account, which is from a regulatory point of view. And finally, the electronic benefit transfer schemes, which will really help us to see how we can able to mobilize that. So next slide, please. That's it I have done. But these are the few things I thought, from a financial empowerment or disruptive drivers. So the next 3 years or 5 years is going to be a pretty phenomenal and interesting way the Indian mutual fund industry or capital market is going to go on. Today, if you look at, most of the mutual capital markets has gone into a zero brokerage. So even the mutual fund brokerage has come down to very minimum. So the SEBI as a regulator is very keen that we are not going to push for more brokerage and we will learn. So it's very much dependent that investors and distributors need to start looking at diversifying their investment, not only in capital markets, or even within capital markets, it should be gold, real estate, mutual funds, equity shares, corporate FD. So that's going to be the way it's going to go on. So self-help group is going to really be the key focus for us, and particularly women who has arguably the best investors compared to male. I think this will really help us to grow, is my view. Thank you.
Thank you, Mr. Ganesh. That was a very informative talk on the role of capital markets. Okay. Our country, India, is seemingly well on its way to becoming an economic superpower. Notwithstanding the pandemic that hit last year, India is still one of the fastest growing economies in the world when we take a long term perspective. However, how many of us, the country, know that the India is also poised to be a financial services superpower? The country has seen vibrant innovation in the fintech space. The digital economy has taken off after the demonetization drive 4 years back. And regulatory bodies have been on top of things while constantly ringing in policy changes. It is our pleasure to invite on stage Mrs. Lakshmi Iyer, President and CII AMC Limited. Ms. Lakshmi will be addressing us on the topic Resurgent India, the next global hub of financial services. As part of our responsibilities at Kotak, Ms. Lakshmi oversees on advisory. She has been involved in road shows covering diverse theaters like Japan and East, and is also responsible for conceptualizing new products for the firm. Over to you, Mrs. Lakshmi.
Thank you, Sneha, and a very good evening to each one of you. Wish you all a very happy 2021. I logged in a bit early and I happened to listen to Ganesh's presentation. It acts as a prelude or a precursor to what I am going to speak today, because it pretty much ties in with the theme that HerMoneyTalks is trying to propagate, that of financial inclusion, and more importantly, having that diversity of having women force participate in the financial services industry, both as a recipient of such services and of course offering such services. What I will do is over the course of next 20 minutes, I will actually try to take you through some peek sneak into where we are today. And the India discussion cannot be started without giving you a global perspective. And then towards the end, I will tie it in to see how exactly the financial services space actually can add value to investors such as you. There is a small presentation of which I would like to use certain slides. I don't intend to take you through the entire presentation, but this is basically the theme that we are talking about. And again, no discussion is, every discussion actually starts with the year 2020, which went by, which in one sense, in typical Bollywood parlance, was an unhoni to honi kind of a year, where everything you thought that was possible never happened, like planning of a holiday, and everything that you thought was impossible actually happened, that you were in a lockdown for the longest ever period in the history of India, or for that matter, the world. However, here the Amar Akbar Anthony that I am talking about is actually the flow, sentiments, and fundamentals that actually led to boomeranging of the indices almost 100% from where they were at the lows in March 2020. But as I said before that, quickly tell you where we are today to actually set the context into where we are likely to be. In a global economic parlance, we have seen a kind of a whipsawed year as far as the world is concerned. But if you see this chart towards the fag end of the year, I can't call it a hockey stick, but certainly there is an uptick or a rebound that is visible across the globe. And that is reflective of the fact that sentiments have soon started to bounce back. And the reason for that is no different or not a surprise. If you look at broadly the balance sheets of various world central bankers, whether it's the US in the dark blue or the Eurozone in the light green or the Bank of Japan in gray, everyone has been inflating balance sheets. So 2020 was the year of malnourishment. When there was a malnourished economy, we had to ensure that steroids were pumped into the blood of the economy to ensure that there is a pump priming effect, which had started to show its results in the early part of 2021. Of course, along with that, we are seeing excess liquidity, which is actually supporting the broader markets, which is why we are seeing the sentiments being positive, followed by the flows. And of course, fundamentals initially took a backseat, and towards the later part of 2020, they actually started picking up steam. And why do you think this is happening? Because the world over, there is almost 25 to 27% of the total bonds outstanding, which are yielding you negative yields. So it is therefore no surprise that money has started chasing. Imagine if you go to a bank and you want to lend, and the bank, or you want to invest your money or park your savings there, and the bank says that you have to pay, I'm not going to pay. That is what we mean by negative interest rates. And this is happening globally, that there is so much of paranoia or the flight to safety that bulk of 2020, we saw this as a phenomenon. The good news is that these numbers are actually receding. This is the joke I'm sure most of you would have seen on your own WhatsApp inbox, that this is a utopian world. I mean, I asked as a question mark because fundamentals are soon catching up. Now in this grid, the person who has answered, it could be Wall Street, it could be any street that you like. But this was the small WhatsApp that was doing rounds, which I thought is very relevant to characterize or to just kind of chart out the situation that we are facing today globally. However, let's come to India, which is what the focus of our discussion today is, and where do we stand as an Indian economy? I think the recovery in India is getting pretty broad-based. Try going to a restaurant over a weekend. There is a waiting time, whether it's in BKC or in southern Mumbai. If you look at power consumption, there is growth. If you look at goods and service tax collection, there is a pickup consistently month after month. If you look at tolls, if you look at holiday, I can give you countless examples. Look at flights. Try flying to Goa even on a weekday and you will find the sector completely sold out and the flights are running full. So I think this is telling you that sooner than later, we are likely to see a slightly more broad-based recovery in India, which is what is enticing a lot of foreign investors. This is the business resumption index, which Nomura tracks. And again, this number is showing you an uptick in the overall business trends. And the reason for that, if you look at this curve, basically is talking about how India has been able to steer clear of the second wave of the ghastly pandemic which gripped the world. And clearly we are showing signs after peaking out almost 6 months back. We are showing signs of plateauing out, where some of the Western world countries are actually grappling with a massive second wave or third wave. I don't know which wave, I've lost count of it. But clearly, India seems to be, to that extent, slightly more resilient because of its policies, because of the preventive measures that were taken earlier. This 2020 was the year of the virus. The hope and the wish is that 2021 will be the year of the vaccine. And as you see, we have had breakthroughs as far as the vaccine is concerned. And as early as 16th of January, we are likely to see the first part of the rollout. So I think we are clearly morphing from high-end pessimism to reasonably optimistic. I won't say the bullish sentiments is 11 on 10. That was a time probably in 2000, or that was the time probably post 2009 phase, where things from an absolute gloom actually started morphing towards boom. But we are at the cusp of that scenario at that point in time. And this is again a little about 3 weeks back, an article which suggests that budget is something which in a century India has never seen. So this is actually building up a lot of optimism and positivity among investors across the globe. And I think that I would say kudos that India is to that extent the lone star shining, which is shown to you in this particular slide. If you look at the last 12 months, and which is why I've titled this chart as Sare Jahan Se Acha. And yeah, these are data points which I have not manufactured myself. This is publicly available data where you can actually see that India was the only country which received $23 billion worth of FPI flows. In fact, just to share with you, if you look at data from calendar year, say 2012, 2013, up until 2020, you will actually see, barring 2 years, I think that was in 2013 and I think 1 and 16, where FPIs or foreign investors were marginally negative or net sellers in Indian asset classes, which is fixed income and equities, every year. Barring these 2 years, in the last 8-9 years, they have been net buyers of Indian asset classes, largely equities, followed by fixed income. And this is, as I said, a trend which continues well into the first few days of 2021 as well. Ownership, again, if you see, if you look at as a percentage of market cap of the entire stocks which are listed on stock exchanges, if you look at the percentage of ownership of foreign portfolio investors, you actually see that trend rising. And I won't be surprised at this space if foreign investors keep buying. Domestic investors are pretty happy selling to the foreign investors, and the stakes are clearly going up. This well could be the sentiment going into, this is a technical slide, I'm not taking through the entire details, but the kind of flows that are lined up across sovereign wealth funds and pension funds and insurance. This is just to give you a chart as to how these numbers have actually panned out 2018-19 versus 2020, and probably what lies ahead in case of 2021. So I think what I'm trying to basically harness on the fact that India is an idea whose time had come, is coming or is there, and is likely to continue for the foreseeable future. And EM equities are the most preferred. When typically when you are rooting for a revival, when you are talking about a huge gloomy past followed by something which is slightly more like a silver lining, what clearly stands out is emerging market, or they say you have to play the beta. And in that kind of a market scenario, India clearly is at that cusp of recipient of flows across the globe. The question we need to ask is that what are we as Indians doing, or what are we women doing in terms of participation? Now, again, here there are some data points. While I don't have a chart to show that to you, I must tell you that I was reading an article a couple of days back, which actually shows the kind of demat accounts that have been opened in the last 6 months. The numbers are only rising. And why these numbers are rising is because of the high-end optimism that the stock markets have displayed. There is work from home, which has become a cult. And if you recall, Ram had shown in his one chart where look at the population of India, then you go look at the number of bank accounts, you look at the number of demat accounts, you look at the number of insurance takers, and right below there you see the number of mutual fund folios, which is just at a measly 2 crore. Now, why again I'm reinforcing that data point is that if foreigners can participate in the India story, my question to all of you is why cannot we Indians take part in this story? If you look at the general holding of equities, and why I'm not talking about overall asset class ownership, but if you're talking about wealth creation, that can be possible via equities as an asset class. But if you're talking about wealth preservation, we are talking about fixed income as an asset class. Here, the aspiration is after seeing a very somber 2020, which will obviously in a box of 3 to 5 or 7 years, you will have some trigger events where you will have years of despair. One really seeks to focus on wealth creation. So there, if you look at the ownership pattern of how the Indian equities are owned as a percentage of market cap, can you imagine how much do Indian households own? The number is less than 10%. And I showed you in that chart, the foreign ownership is almost 1/4, almost 22-23%. Promoters are owning a good 1/3 plus, but I'm focusing here on retail India, which owns less than 10%. This number may have gone up in the last 5 years, but as I said, the number is very, very measly. We are seeing 2 or 3 distinct trends, which I think I would like to drive home as a point and as part of a thought. One is if you look at the global population, almost 50% of them have internet access. Second is if you look at India specifically, or within the top 3 who actually lead as far as the incremental internet usage is concerned, it's China, India, and US in that order. While countries like Denmark have 100% internet usage, we obviously are an agrarian economy, and 50% penetration is considered pretty high. And this number is only rising. If we would have done this talk show maybe 5 years back, the internet penetration in India would have been just 26 to 24%. Therefore, it comes as a very less surprise to me that the demat accounts which are being opened, and we were looking at the NSDL and the CDSL data combined, that clearly has shown a month-on-month increase, a Q-on-Q, year-on-year, as the case may be. And these numbers, mind you, my friends, only set to rise because there is that need, there is that understanding which has developed probably because of realization that there is a method in the madness if one were to do it in the right manner. Having understood that, yes, there is a benefit, yes, there is a clear case for having or being participant in the capital markets, because if I were to take a show of hands, and typically I used to do this when we had a live audience who has a bank account, the room was like near 10 on 10. It's not even near, it's like a 100%. When I would ask how many of them had insurance, again that number would be a pretty significant chunk. chisel down further to demat accounts, the numbers reduced, but it was certainly higher. And then when finally it came to mutual fund folios, the numbers dwindled to like a few. In fact, I should have asked how many don't have mutual fund folios. That number would have probably matched the bank account ownership. And why I'm telling you, or why I'm sharing with you all these bits of information, is to tell you that it is inevitable. It is inevitable that you have to participate in the boom that India is at the cusp of. In the emerging market pack, at once upon a time, India used to be called the fragile five. It is no longer that case. We are the formidable ones, which are actually being the torch bearers to take the world forward. The last 3 months have shown what kind of flows, what kind of inflows that India can attract as a nation. This year, we are likely to, I'm talking about the financial year, which is not yet closed. This financial year 2021 is likely to close at a record high balance of payment surplus, anywhere in the band of $95 to $100 billion. Ownerships are rising, accountability is increasing. There is ease of doing business, which is increasing. There is ease of investments, which are increasing. And as Ganesh rightly pointed out, there is a DIY investor. For all of them, there is IKEA. You go to an IKEA, get the stuff, assemble it, and do it. That is only if you are very well conversant with the parts. But for every other investor, there is an advisor sitting right next to you who you need to tap the shoulders and actually draw out a financial plan for yourself. Me being a woman doesn't mean that I am, a staunch supporter of women's lib, etc. But I genuinely feel that women tend to take a back seat as far as financial inclusion is concerned, or for that matter, trying to diversify their own financial portfolio. And there is an innate sense of contentment by having traditional mode of investments, including banking products. The reason why I gave you a snapshot, 20 minutes is a very short time for me to cover the entire diaspora, but I think it was very important for me to drive home the point that this recovery that we are seeing is for real. We will have bouts of volatility, but it is extremely important for each one of us, to stay the course. Another interesting data point, and this is the last 2 points which I want to make, is if you look at the entire SIP, systematic investment plan is something which the mutual fund industry has been talking about hammer and tong. Cliche as it might sound, we saw a peak of almost 8,600 crores of monthly flows from retail investors like you and me actually go into mutual fund equity schemes. And that was a month-on-month participation, which allowed you the flexibility to participate with your money, yet not try to time the market. Unfortunately, the numbers actually receded as the market started correcting, and we saw a low of almost 7,400 crores, the flows come down to. Now, one question and if there is any one of you like that in the audience, the only question you need to ask yourself is, what has been your opportunity loss? So basically from March to date or December, we have seen indices double. We have seen SIPs deliver over 70-75% CAGR on the index. And ultimately, the one who chose to time the market actually felt he or she, in this case, she was caught in the lurch. So I think it's very important that we stick on to the pitch. On a closing note, I would say that for me, of course, there are many cricketers that leave a mark, but for me, evergreen, the god of cricket always has been Sachin Tendulkar. And he actually, in his entire career, faced almost 33,000 balls. And the number of balls that he actually hit, which he went for a 1 or a 2 or a 6, etc., was no more than 16,000 balls. But it was important for him to stay at the pitch, stay at the crease and not get out, for him to be getting those opportunities to hit the ones and the fours. So I think my message to all of you is very clear. It is inevitable that financial inclusion is coming. We are much better than where we were a decade back, but I still believe we are at the tip of the iceberg. radical achievements can be made if you and me together participate in this India global story. Thank you so much for a patient hearing.
Thank you, Ms. Lakshmi, for that wonderful talk on India's potential and what lies in stores for millions of women in India who look forward to become financially more aware and confident. I request the audience to share their questions, if any, in the chat window. These will be addressed there in the concluding Q&A session. How often have we heard someone say, "Oh, that seems to be an impossible feat to achieve"? How often have we discouraged ourselves from striving for something just because we felt it was not out of our reach? How often do we tell ourselves that numbers and personal finance are not for me? Most importantly, how often do we let these negative thoughts linger on in our minds and find our life goals slipping away in front of us? Well, say goodbye to that negativity, for we have Ms. Rita Na Chaudhary, independent process transformation consultant and mentor, and ex SVP at Bank of America, to speak to us on the topic using Lean to develop a can do mindset. Ms. Rita has strong experience in change management in metrics organizations and has a bias for data. A proponent of lean principles, she has extensive understanding of process redesign, waste reduction in the system, and focusing on customer value. Over to you, Ms. Rita.
Thanks a lot, Sneha. And a very good evening to everybody. I just, this is such an opportune moment to have this session because we've all been living through the pandemic, and the pandemic has really rebooted our lives. It's rebooted our relationship with ourselves, our colleagues, our family members, and also our attitude towards money. I think, while we were staying at home, we realized what we didn't need, what were essentials, what was non-essential. And while the pandemic has created distress in everybody, I think it has created far more uh, pain to women. There is a McKinsey study which actually mentions that for every job that one man lost, there were 1.8 women who lost their jobs. We live in an unfair world, but what could we have done better? And really, we are now at the cusp where we have to start thinking that if we could have built, managing personal finance as a skill, as a life skill for women, then we feel far more empowered, far more liberated, and it would kind of prepare us for exigencies. We are never ever well prepared for exigencies like loss of job or loss of a dear one. But somehow financial, I think, security brings you there. So today, while Sneha has talked about, lean principles and all, I'm not going to talk about that. I'm really going to talk about a personal story, and through my personal story, take you through a principle called 5S. But I will keep 5S aside for a minute, and I will just tell you about our financial awareness of women that we have. It's an entire spectrum. On one end, we have smart women who are trading on the stock exchange, on structured products, they're buying structured products, they're buying FNO, they're buying shares, they're trading, they're damn savvy. On the other hand of the spectrum are these careless people who don't care, who don't want to know. It's, I want to wear blinkers. I don't want to know, just I'll earn the money, I'll give it to you, you invest. But I think somewhere the answer is in between where you have a whole bunch of smart women who want to know but don't know how to start. And really, if I talk to you about some of the stories, I want to tell you about my own sister. Very intelligent, exceptionally bright, did well for herself. Come the meltdown in the Sensex in March, she goes and sells off her entire equity portfolio. If she had remained invested like Lakshmi just mentioned, she would have made a straight CAGR because she's a lump sum investor of at least 17, 18%. There's another friend who just lost her job, huge liabilities, and she comes and proudly tells me, guess what? I've been very meticulous with my savings. My savings have been I repeat, all in bank FDs. And it was at the tip of my mouth to ask her, and what does it do to your tax? And what does it do to inflation? And has your money grown? And I'm not the expert to tell you, and there are people like Ganesh and Lakshmi and others who will tell you about how you can build your finances. But today I'm going to tell you about how you can start. And really the reason why I'm picking this thing on how can you start, I'm talking about a thing called 5S, a technique called 5S. 5S is a principle that is part of a lean manufacturing methodology. In post-World War II Japan, there was lean manufacturing simply meant that you would increase the value of a customer by reducing waste. And when you reduce waste, you continuously improve on your processes and continue to deliver value. 5S is a principle of this lean methodology. And I will come to what does 5 stand for, what are the 5 S's. And I'll just, for a minute, share the screen with you. Just a minute. I'm sorry. So I just want to mention that this is what 5S is. It is about sorting, and I will take you through each of these concepts while I speak. Why did I choose 5S? It came from a very, very personal big event in my life, and I lost my father in December 2019. When I lost my father in December 2019, he was a career banker who thought he saved very diligently, which he did. And for us as a family, we knew the amount of money he had, and we kind of knew what he did with it. However, when he passed on, that's where the nightmare began, because it wasn't about diligence. It was about being meticulous. Where did he save the money? Where are the papers? Where are the nominations? Where is the will? What is the will saying? I mean, those huge number of questions again. And I was thinking to myself, if we had in those days, of course he was an old man, but if I could have very simplified and said, why don't we use 5S? I think we wouldn't have struggled even as of today. So I'm going to take that event as a case study and explain 5S to you. So the first part of 5S, so what does 5S do in a manufacturing situation? It really just cleans up the environment in which it labels off your equipment. It will set up the floor plan so that there's less movement between people. You know where things are. You're not losing time. You're not overproducing. You're not wasting, and there are no defects. But you're taking this concept, and this concept has been now switched over to other fields beyond manufacturing, like IT services, knowledge services, and today it's a philosophy and a mindset. So with that, I want to start with what is the first S, which is sort. Sort is really taking a look, and I'm going to transform this or transmit this to the financial services world. So when you say sort, I'm really taking a look of what I have. What is it that I have? Now, you don't have to know, like, even if, let's say, someone in your family is managing the accounts, your savings, ask them one day, show me what I have, show me what we have together, show me what I don't have. I hope they can show you, and especially if you're married and there's trust, they should be able to have a far more transparent discussion. Show me what you have. So in this part of showing me what I have, I will box things by income, by expenses, by debt, by investment, by mutual fund, shares, FDs, capital assets, and the like. So once you know what you have, you also need to know what you need. Do I need this? I have 10 bank accounts. Do I need this? And what is it I don't need? What you don't need is what you call red tag technique. It doesn't mean that here's a share certificate of a company which has closed, so I just tear it up and throw it. No, you're not going to throw anything. You just tag it and keep it aside. And you'll take a look at it at a later date, because your priority is to see what you have and what you need. Coming back to the case study, when we started doing the sort exercise for my dad, we suddenly realized he had multiple accounts with the same bank, with the same branch, and there was no, it wasn't, and they were all saving schemes. So we were like wondering, what is it? And then when we went and spoke to the bankers, we suddenly realized that every time an RM changed, that he or she would convince this old gentleman to open an account, and he would open an account, and with the account came checkbooks and debit cards and the like, a whole bunch of things. We unearthed a whole lot of shares, which were some of them in a physical form, all kinds of things. Some in companies which are closed. So if you understand what I'm saying, this is like a stock taking of what I need. We then move on to set in order. What you do in set in order, when you say I need it, here you're really, what you're doing is you're re-looking at at everything that you have with a tooth comb. For example, you have savings. Where are the savings account? Where is my debit card? Who's the check? Who has the checkbooks? Who are the co-owners? Where are the nominations? You'll go to that extent to see that should something happen to you or me or whoever owns it, that there is a smooth transition to the next successor. Same goes for mutual funds. We go and buy mutual funds, and we have innumerable funds. And I'm a big proponent of mutual fund, don't take me wrong. But it doesn't mean that you have to have 30 and 40, 40 funds, some of the same fund houses, some of the same type of funds. It's not required. And therefore, you may want to consolidate it. Do we check the performance of these funds? Do we check the performance of shares? Do we check to see whether you're getting any kind of dividend? Do we check to see if the account, if the company actually exists? What about insurance? The biggest and the most aggressive sales guys you see is not just sitting in the banks, but you also see them in the insurance companies. You'll have dime a dozen pushing insurance, and you're buying insurance without thinking that you need it, don't need it. You're paying premium, you don't even know what are your exclusions. You'll find a whole bunch of it. And this is not just insurance. Like I gave you the example of my dad and his bank accounts. You'll see, I've been in the financial sector. At one point, I had 50 funds, and I'm now, I'm actually advocating the fact that you need to consolidate. And that was helped by my RM in the bank and not by me. So when it came to I'm just going back to this case study of what was set in order. When we wanted to set things in order, first thing we knew is we had to consolidate the accounts, and we had to look at the big picture. What are my goals? What are my financial goals? If I have to set things in order, I first need to know what are my financial goals. Do I have to send my son for education? Do we have to get someone married? Do I have to buy a house? Do I have to repay very expensive debt? There can be do I have to go for vacation? And then you also need to know, you understand your risk appetite. Like I've mentioned, this friend of mine put everything in FDs. To me, that's a suboptimal option, but it may suit her risk profile. And I'm no one to say whether she should or should not, but I have reservations. So you need to understand your risk. And there, again, going back to what Lakshmi says, you need to tap on that advisor who's sitting next to you, the banker who's sitting next to you, ask for formal expert advice if you can't do it yourself. don't try to be an expert. We aren't experts. We don't understand all the nuances of products. And it's okay. And a lot of it is free. Some of it you may have to pay for. Some of it you read. There are enough and things on the site, on the internet where you can. So once you know you have set in order, and another important part of once you set things in order, you digitize certain things, you need to digitize certain, you need to store your, your credit card, your debit card, your checkbook, your passwords, and you store it in a digital space or in a physical space. You have to communicate where are these things with someone you trust. It could be a family member or whoever, but you have to communicate. It's again, I'm giving you the example of my dad. He did all of this. He vaguely told us what was happening. We vaguely knew what, but we did not know specifically what was happening. And it wasn't that he was trying to be secretive. It's just that it didn't occur. It didn't occur. So, and this is, as women, we have to understand that 90% of us will outlive our spouses because our whole longevity is much higher. So the time to start in, getting interested is now. It's never too late. So with that, I want to transition to the next S, which is shine. Shine is really about those, when you were setting things in order, it's like cleaning your cupboard and you suddenly see this expensive dress you bought 5 years ago, you no longer fit in there, and you say, gosh, I went and bought this. Shit. What do I do with it? Do I lose weight or do I give it off to someone? Those are those aha moments where you discover things about yourself. It is about those making those changes, those behavioral changes. Why, if you go through your credit card statements in your previous thing of setting it on order, and you look at your 6 months credit card statement, it's a huge and a very accurate insight into your spending pattern. You'll know whether you're spendthrift or you're thrifty or you spend, sensibly. It's all up to you. And then this in Shine, you will really do the cleanup. Once you know what to do, this is where you actually take the steps of going to the bank saying, I need a joint holder, I need a nomination, I need to dematerialize, I need my share, my demat shares to be linked to a trading account, even if I don't trade. So should something happen, they can be liquidated. Now, again, going back to as far as this case study is concerned, when it comes to my dad, and while we really are at the shine piece, and this is taking us forever. This is one of the most difficult things, because given the rules and regulations, you can't just transfer assets like that. And therefore, I cannot underscore how important it is for you to know what's going on behind the scenes. Yes, you manage the budget in all probability. You're saying X amount to be spent every month. Here's the money. But you know Y amount goes for investment. And most of us, or many of us, may be least interested in the why. This is about getting interested in the why. So Shine is really about cleaning. And while you clean it, please ensure you have a will. I mean, yes, death is inevitable, but we are not talking of death. We don't know when we're going to die, but it's important that we all have a will. So that whenever it is that you're not going to create trouble for people who survive you or outlast you. It is making those behavioral changes. It is about telling me, can I save a little more? Once you understand the picture, it's, 5S is fabulous because it's a visual thing. It's a mirror of what's going on in your financial life or in your life. So if you know you're spending a lot, it's a no-brainer that you have to spend less to save more. But I don't want to give you those saying, I don't think you should have a latte, I don't think you should buy. That's not my job, because you tell me go for a walk. I don't understand anyone's, financial situation. Therefore, I'm not going to give you solutions. But all I'm telling you is that we all have challenges of understanding finance. Femvest will help you at least spread it out. Like it's like you're trying to solve the jigsaw. You are beginning to put those little pieces together to understand what's going on. And once you take action based on your needs, you will go to the next thing of standardizing. Standardizing is those aha moments, that you've gone through. I spend a lot. Can I save a little more? Can I save 600 more rupees more? And instead of it, this is about saying it's very difficult to change our habits, and habits die hard. And I want to say that suppose instead you told yourself, and in this whole behavioral economics, they say, you can't change, it has to come from within, right? As a transformation catalyst, one thing I know is to know better is to tell people it's time to change. Just me out. So it's about telling yourself, can I change, save 600? They say, you probably say, no, not possible. But suppose I tell myself, can I save 20 rupees a day? The answer is probably yes, and the outcomes are the same. So those are the type of micro changes you should start making, and making a standardized rule set for yourself. For example, you can tell yourself, I'm no longer going to buy an expensive product, financial product, without telling someone or, asking somebody about it. I'm no longer going to do things which don't mean anything to me, say even one. Can I save some more? Can I, those are the rule sets that you have. I will not dip into my savings this year as far as possible. I will clear my credit card loans. I will not revolve my loans. Those are some of the things that you keep, is what you standardize. Finally, you do this entire activity. It is about sustaining. It's like cleaning your house. We clean it every day. We don't clean our cupboards every day. We may do it once a month. But this is, when it comes to finances, it's so important to you. I think it's, it makes sense to revisit it at least once a month, because we live in a very, very volatile situation, not just our ecosystem, but it's also our lives. We don't know what's happening. So it's important that our goalposts may change, or my job may change. I may not have a job. The markets may collapse. There may be a war. So why would it not make it a habit to look at what you have at least once a year or once a month? If that's too much, make it once in 6 weeks. But the underscoring it is saying, look at it. It's important for you. It's important for women. Financial security is important. So summarizing everything, all I'm saying is I've taken a case study of what's happened in my own life, introduced a concept of 5S, which is really taking a broader look at what you have, whether it's managed by yourself or by someone, going through it with a fine-tooth comb, making a habit, making certain standard rules based on what you're seeing, and making a habit of revisiting your plans, your future, your goals once a month to see how far you are. Are you happy? Are you not happy? And so on. So with that, I want to thank HerMoneyTalks. I want to thank the BSE for letting me come here. And I do hope, and I really hope, women I'm more power to them. And I'm sure this is just, we are midway through it. Things are going to change. I'm very positive of that. And I'm sure we're going to see much more in the next few days, where we will have further discussions around this topic. Thank you.
Thank you, Ms. Rita. That was a phenomenal articulation on using the power of human mind and reaching within ourselves to explore our limits with numbers and in life. Thank you. Yes, Mr. Ganesh to answer a few questions. And one is it safe to start investing this year since last year has been so, bad economically? How will it be this year according to you?
That's quite an interesting question because how they decide the economy was bad is a question. But if you look at the way the market is going on a different direction in compared to the economy, right? So end of the day, people need to look at whether they are interested in seeing the economy will improve, or they want to invest. So I feel this is a year of opportunity in capital markets. At least for me, like a lot of people who stayed invested for continuous, or at least started investing once the market started falling deeply somewhere in April or May last year, are immensely benefited. And the more you stay invested in capital market, it's going to help. So instead of looking at from my investor mindset, I can agree. Economy and market is different. We are now Nifty is inching towards 15,000 first time in the history, and then BSE Sensex is heading towards around 50K, which no one would have expected, particularly this time. So I think that should be the optimism. The market is going on. I think Indian capital market has been looked into more stable comparatively. It's slightly late for someone to get invested now, but nevertheless, I think should start worrying about economy, bad economy, and unfortunately, this is pandemic is something which is beyond our control. I think staying invested and starting quickly will be the beneficial for anyone.
Okay. So I would like to ask one more question, which says, when do you expect to need to withdraw a significant portion portfolio?
No, again, depends on person to person. If you actually ask me as an investor, I did book some of my profit and parked it in the liquid fund. Some of those equity schemes where I got really a good gain due to the way market is surging now. So I did withdraw and then put it in my some of my liquid fund. But again, it depends on the investor. If somebody wants to stay investor, obviously the money is going to grow. But if there is a requirement, obviously they can take it. But please do understand that if you're going to withdraw the money and going to invest in any banking products, that might offer you around 3-4%. But normal liquid scheme or a debt scheme, I'm not sure Lakshmi is there or not, she'll support me, will obviously give you around 6-7% as a bare minimum. So that where I would say it depends on people to people. But if you want to really book profit and take some amount, I think capital market, liquid schemes or debt schemes could be the better bet to kind of stay invested.
Right, that was that. Okay, so just one more to entertain and then we'll go about the session. So it is about like currently all term deposit interest rates are going down, and so are debt products compared to this, and what is the outlook or recommendation for a safe risk-free investment in this year?
No, I would like to pause this. This is definitely Lakshmi's forte. It's quite sentimental also given the current debt meltdown. So I will kind of pause this and probably you can reach out to Lakshmi for her comment. So.
Okay. All right. So, yeah. Ma'am, would you like to give some views on this?
Yeah, so we can answer that. Since some viewers may be waiting for some direction in terms of the term deposit rates vis-a-vis the debt products in the market. So yes, it is a fact that currently all the small savings schemes and term deposits or anything to do with savings component is definitely muted in terms of the interest rate. So even if you're parking your funds there, it would hardly be beating even inflation right now. So a better recommendation or a better option would be to look at debt funds. There are two types here. There are, in fact, multiple types, but for the sake of this discussion, I'm simplifying it. One option would be to look at liquid funds or ultra short duration funds, but these are more of a stopgap measure in terms of they are not going to give you the investment, because most of these funds either have a 30-day or a 90-day kind of window in which to in which they mature. The other really comparable product in the market would be your medium duration funds, your medium to long duration funds, and the long duration funds. Now, each of these have their own windows of maturity. Medium funds anywhere from 1 to 4 years. Medium to long duration run from 4 to 7 years, and anything above 7 years is a long duration fund. Now, these could be a little more comparable or a little more attractive in terms of interest rates, but not expect too much anyway. You could probably get a couple of percentage points over and above the best term deposit that you could get for a comparable duration. That's the upper end of uh, the rate differential that you would get. So maybe we'll have to wait and watch a bit in terms of what the market does and how it moves. But usually, interest rates do not fluctuate too much within a quarter or two. So that's the outlook as of now.
Okay, I get it. Thank you so much for explaining this, Mr. Ganesh and Mr. Hemant. Okay. Well, we have talked about capital markets and research in India. We have also touched upon innovation in BFSI and developing a can-do attitude as investors. We now move on to an equally intriguing topic: is fintech missing the human touch element? A hard look. Riding on the back of continuously disruptive technologies like blockchain, AI, ML, and big data, delivered more innovation in the last 5 years that has happened in the last 50. Deservedly, it occupies pride of place and mindshare in today's narrative of performing sectors. Yet, has this reliance on technology gone too far? Are we missing the human element somewhere? To address us on these issues, we have with us and CFO, Mr. Hemant Gaurav. Mr. Hemant is an IIM Calcutta alumnus with over 22 years of corporate experience in business strategy, financial planning, branding, and marketing. A former head of business planning at IBM India and former head of strategy at Genpact Analytics. Mr. Hemant is also a startup mentor, a holder of advanced certification in finance in capital markets, and a published author of business books for Penguin and Westland. Mr. Heyman, over to you. Thank you.
Thank you, and let me welcome you all again. As co-founder of HerMoneyTalks, it gives me immense pleasure. There are no words to put to what I'm feeling right now in bringing this experience to you, to all of you. I hope you guys, all of you, I hope you love this experience of Femvest 2021 as much as we did in terms of putting it all together. Uh, so apart from loving this experience of bringing this event together for you, we what we do at HerMoneyTalks, my colleague Nisa has already explained, but let me sum it up in one sentence. We just love working with women in bringing in financial empowerment. There are various narratives that we have not only experienced, we have discussed various ideas, we have discussed various experiences we have seen and heard, which has led to the birth of HerMoneyTalks. And that brings us here with Femvest 2021, a new beginning, I hope, for all of us, especially in financial empowerment. Now, we have already had three stellar talks by three equally stellar speakers on capital markets, on resurgent India, on what lean thinking can do for a positive mindset. All this in the context of dealing with numbers, dealing with life, dealing with financials, and thereby seeing what such a mindset, such insights can do for your personal finance. Now, coming to personal finance, the industry immediately relevant to all of us as investors, as insurance seekers, as depositors, as the common investor would be the BFSI industry. Now, the BFSI industry has always been an economic engine for India, like in other parts of the world. It's always been an early adopter of technology. It's quick to latch on to technology trends, partly because it's compelled to do so because of the very nature of the industry, and partly because I think there's a first mover kind of a DNA in the industry itself when it comes to adopting new trends or new technology or new apps, etc. So I think there's a very fine DNA that runs in the banking, financial services, and insurance industry when it comes to technology. And over the years, over the decades, or maybe in the last decade and a half, this has somewhere given birth to fintech. Now, what we see as fintech today, financial technology, initially had its birth as an ancillary industry to financial services and banking, where fintech was seen more as a support or more as a ancillary function to the main industry of BFSI. Over the years, and especially in the last 8 to 10 years, the industry has started to mature into a more into playing a more central role in the scheme of things. And today we see fintech actually being one of the main drivers of the banking and financial services industry and insurance as well. So that's been a very compelling arc that it has painted, compelling arc that it has traversed in the Indian economy. In fact, if I kind of give some perspective in terms of some numbers, India is one of the highest fintech adoption rates. At 87%, it beats out the global average of 64% by at least 23 percentage points. Now, that is a huge gap in terms of uh, how investors have lapped up fintech, how the common investor, the common depositor, the common insurance seeker has welcomed fintech, welcomed apps that play in this area, and combined with the internet penetration rate in India, combined with the surging mobile penetration rates in India, I think it's a blockbuster story that's unfolding even as we speak. And to give some sense of where we are headed, the fintech industry itself is expected to reach around 6 trillion by 2025, another 5 years. The growth rate is an astounding 22% at a CAGR basis year on year. For an industry that has always been held back in the, let's say, the early 2000s and the late 2000s, this 22% growth rate is actually auguring well for us, given that we are just out of a COVID year, given that there are a lot of uncertainties still playing around, given that the economy is still not back on its feet, not only in India but also globally. So I think this is a stupendous rate if this can carry forward, if this can sustain, or if there's been a dip, yeah, if it can come back. For example, there was a dip in terms of at least the investments, the fintech investments or the investments into the fintech space are not at the same level as they were, for example, in 2018, right? So 2020 saw a major dip. 2019 also was not as good as 2018. But assuming that we are back on track, assuming the economy is getting back on its feet, a 22% CAGR in fintech for the next 5 to 10 years, we'll see this industry outstrip most other uh, forward-looking industries, so to speak. But let's not miss the wood for the trees. Is this a story too good to be true? Are we uh, are we missing something in all of this? So that is a question that I would like to address today. I'm not big on big speeches. I would like to keep it short, sweet, and snackable. So what I'll do is, uh, given that we are trying to answer something uh, on the essence of, is there something missing in fintech, the fintech story that's unfolding? Let me hark back to a chance conversation that I had some time back with a lady, ex-colleague of mine. She works in the IT. She works in the IT field with an MNC, and we go a long way back. And we happen to be talking and exchanging notes about how each other's work is going on, etc. And inevitably, the talk circled around to the BFSI industry, and then specifically fintech. Well, that's something close to my heart. So inevitably, the conversation circled around to that, and then her reaction to the word fintech that left me a little dumbstruck. It threw me off. And this was her one line response to fintech, the word fintech. She said, fintech sounds almost inhuman. Now, I'll repeat, fintech sounds almost inhuman. This is what she said. And expectedly, I was a little taken aback. I was a little thrown off. I couldn't fathom the context or connotation of what she's saying. And that left me wondering. There were a few questions in my mind after that conversation. So let's park that conversation for a while. We'll come back to it. We'll circle back to why she said that, or what did she probably mean by that. Let's look at the core of fintech. What's at the core of fintech? It's a financial transaction between two humans, right? So there's nothing else here. Of course, aided by technology. Now, if you look at it in this kind of a simplistic way, there are two human beings wanting to transact, exchange goods and services for a certain consideration. And this used to happen in the earlier days, pre-fintech. It used to happen directly. There's no technology, so there's no. You need to go to the bank. You need to go talk to the teller. You need to probably say hi. You say hi to the security guard outside the bank. So there's a lot of human touch as you progress through the transaction, right? You need to cut a check, or you need to bank a check, encash a check which somebody is presented. You go to the bank, you present it in the counter for encashing, and then you say hi to the manager who you have been seeing for the last 10 years. So there's a lot of human interface, a lot of human touch, personal touch. Now, suddenly, when fintech comes in, what happens is automatically all this other human beings who facilitate your transaction, they somehow completely disappear, right? So for me, that if you look at it that way, for me, fintech seems to be an oxymoron. While on the one hand, it is trying to facilitate a financial transaction between two humans, on the other hand, it is doing away with some of the personal touch or the human element that facilitates this transaction. So that set me thinking. So fintech seems to be an oxymoron. Uh, Having said that, uh, there are a few things that are happening in the fintech industry. There are, if you gaze into the crystal ball for the fintech industry, there are probably 3 or 4 trends that threaten to play out. Let's look at what these are. I'll come back to this conversation that I had with a colleague, and I'll come back to the oxymoron definition of fintech. One of the major trends that seem to be emerging in the fintech industry is that of invisible payments. Now, under this umbrella, you have all your contactless payments. You have your NFC, near frequency uh, communication enabled devices. You have your digital linkages, etc., so on and so forth. So there are a lot of digital integration that's happening, and there's a lot of data collection that's happening. So this is playing out as we speak. This is only going to get deeper as we move along. And if you look out in the next 5 to 10 years, you can see an entire web of digital linkages formed to facilitate any transaction that you might have. The second trend that kind of emerges or is emerging, and which you can expect to strengthen over the next 5 to 10 years, is that of what I call as omni-service platforms. Now, what are these omni-service platforms? Earlier, you had the entire omni-channel devolution play out in the retail industry. So, wherein a customer uh, searches for a brand on the internet, uh, probably talks to an agent over the phone, an advisor over the phone, or the company representative over the phone, chats with them online, goes out to social media page of the brand and picks up some information. Maybe on the in the mall, gets into the local store and sees what's what, and finally maybe orders it online. So there's a lot of touch points that's happening in the that used to happen, and the brands started picking up on these touch points and kind of stitching them together, and then enabling one seamless experience for the customer, and that became an omni-channel kind of experience in the retail industry. Now, something similar or synonymous is happening in the fintech industry, where a lot of apps, a lot of technology apps, financial apps are getting integrated onto single platforms. So there's going to be, and this trend is going to play out even more severely as we gaze further ahead in time. There's going to be a lot of instances where one single platform will carry banking services, will also give you financial services, will give you advisory, will give you insurance products and so on and so forth, maybe debt products and even gold, for example, gold, paper gold. So this trend is already in place, but what we don't realize is the extent to which this will explode in the coming years, right? So the digital convergence is happening either on your mobile or on wearables, in fact, and there are going to be even deeper API integrations that's going to happen between platforms and apps. So that's the second trend. And the third trend would be the intense focus on cybersecurity. Now, cybercrime needs no introduction. We have seen almost US dollar 15 billion worth of damages due to cyber fraud, due to identity theft in India alone. And and if you go to markets, evolved markets like the US or even China, for example, a lot of these, China may be a different case, but if you look at the US, a lot of this cyber threat, cyber security frauds, identity frauds, etc., are uh, kind of a factor of 5x or 10x compared to what we are facing here. So, expectedly, the answer has been from the cybersecurity industry to ramp up their protocols, ramp up their infrastructure, ramp up their algorithms. And this you can expect to continue to a point where probably you'll be uh, seeing what you see today as protocol would be tomorrow's legislation. That's how I would like to put it. You may in fact find that a lot of protocols being followed, protocols being non-mandatory, being followed, may actually become legislation. That's how bad it can get in terms of the fraud. And the answer to that fraud would be to legislate a protocol. And um, and finally, the fourth trend emerging inevitably comes down to artificial intelligence and machine language. Now, while we have heard these two words all around us, it's in every industry right now, practically every industry. We know that AI and ML can help us in cost reduction in the BFSI space. It can help in automation. It can help in customer service. You have bots, you have recommendation engines, you have robo advisory engines, and you can also probably get into help get help in terms of new product development from AI and ML, because let's face it, machines can be a better reader of customer preferences and better reader of customer behavior or purchasing behavior uh, based on their brute analytical power. And if you throw in big data, if you throw in data science, there's no way a human brain or human intelligence can match what AI can throw up in terms of purchase patterns, etc. So there's no wishing AI ML away. So that's the fourth trend, which is going to be even more pervasive in the next 5 to 10 years in the fintech industry. Now, why am I talking about these things, these four trends? Let's look at what is the common thread in all the four trends. If you look at the first one, invisible payments. Now, like I said, if invisible payments play out, if NFC devices, if contactless transactions become the norm, what happens? Suddenly, you have no tellers in your use case of buying a financial product. You don't need to encash checks. You don't need to even let's say uh, let's say there are no tellers, there are no account opening clerks. A lot of us are accustomed to digital payments, but let's face it, India resides in the villages. India resides in suburban pockets. So there's a vast swath of people, more than 60 to 70% of India's population, who are not part of this digital haves. So there's a digital have and there's a digital have not. So they are not part of the digital haves. At most, probably they do a simple SMS transaction and that's the end of it. So once digital invisible payments come in, yeah, once contactless payments come in and take over the entire space, you suddenly don't have any all these people that I'm talking about, the vast swath of the middle of the pyramid. Uh, they are used to your traditional ways of banking. They're old school. They still go to a bank, the post office to open an account and get a passbook uh, updated, etc. So once invisible payments come in, suddenly there are no tellers. Suddenly there are no account opening clerks. There are no intermediaries, which our rural folks, the suburban people, are so used to. There are no guards to wish on your way to the bank. There's no one to smile at you. And God forbid, what if there are no banks either in the foreseeable future, right? Think of it, it's not a very uh, impossible probability. It's definitely possible because as and when the more digital money gets, the more physical brick and mortar banks tend to wither away. And then finally, you may have a situation where the only guards you will find are not guarding banks, but they are guarding, let's say, server farms which host your digital money, right? So think of the scenario, and you'll soon realize that probably 80 to 90% of the human interface disappears in this kind of a context. Come to omni service platforms. This is even further down the spectrum in terms of doing away with the human interface, because when the entire financial market comes home, it's sitting on your wearable, it's sitting on your mobile phone. You don't have a need to see another human being to conduct a financial transaction. It's as simple as that. So again, if you play out the scenario in your mind, it could lead to something similar to what I discussed for trend one. Trend three is cybersecurity and uh, the protocols becoming legislations, etc. Now, earlier, what used to happen in the good old days, and when I say good old days, it's not 50 years back, it's probably even 15 to 20 years back. What used to happen was financial transactions essentially between two humans, and then you trust, if you are one of the parties, you trust the other human in terms of keeping up their end of the bargain, or either providing the products and services that they are selling to you, or paying you if you are the seller. Now, cut forward to today, or let's say 5 years or 10 years hence, uh, If digital payments become the norm, if invisible payments become the norm, if omni-service platforms become the norm, and there's no human interface, human touch, everything is brought about or facilitated by a system. And then it will come to a point where you will have to have trust the system in terms of whether you want to transact on this system or not. So essentially, what will happen is trust between two humans has been or is being replaced by having to trust a system. And finally, AI enable the fourth strength that I talked about. Simply put, despite all the advantages of AI and ML, despite all the use cases that are being conceptualized and implemented in every industry, despite all of that, uh, essentially what's happening is you're productizing human intelligence. That's how I would like to put it. You're productizing the human brain, and then you're distributing it across use cases across the industry. Now, uh, I wouldn't want to sound too gloomy or cynical about fintech. I love fintech. I love the progress that is seen in the last, especially last 5 to 7 years. But it's just a note of caution that are we missing the human element somewhere? Are we accelerating too hard or too fast down the path of technology that we may be left in a situation where we it will be irreversible. You can't bring back human elements once it's past the point of no return. And then are there implications of that? Are there repercussions of that for humankind? It's a slightly larger question, so there's no answer today for that kind of broad-based idea. But I would like to kind of now uh, talk about with that in your mind. I would like to talk about a small incident that had happened to illustrate the presence versus absence of uh, the human element in financial transactions. But this was about 20, 25 years back. I was probably buying one of my first life insurance policies, and at that time, in those days, you have these commissions that agents willingly distribute, willingly share with the consumer. And it was an established practice. There was nothing wrong in it, and after all, they're making their money, and it was so competitive. You knew that there's an agent next door in every street, so each agent feels the pressure, and they happily give away whatever 50% of their commission, and we had no qualms in taking that up. And I was uh, back then I didn't have any qualms in taking that whatever 300, 400 rupees that he that particular agent gave me for taking my first insurance policy. And that was the end of it. I didn't think much about that incident. It was only later that sometime later that I learned that this very same insurance agent, uh, his wife was critically ill, and I learned that he was incurring a lot of medical expenditure, and that set me thinking in terms of uh, I hadn't known about this when I purchased that insurance from him, but I couldn't detect that from his face or his demeanor. He never even once spoke about it. I could see it. I can remember the incidents because he was with a wide smile. He was parting with that 50% of commission, and little did I know that at the background, all this medical emergencies happening. He's undergoing some trauma in terms of a loved one being hospitalized, etc. And I learned that it drained a lot out of him, that medical emergency. And for some reason, this incident stayed in my mind because I felt that this human being is willingly giving away whatever little he is getting in order to earn his livelihood. Now, cut to today, just to give you a contrast, cut to today, I probably receive about 400, 500 calls a year. People trying to sell me all kinds of products, insurance and health insurance, life insurance, and loans and personal loans and things like that. For the life of me, I cannot remember even one. Forget a face, I can't remember even one single name, right? And none of the brands have been able to have that kind of an impact on you when they talk to you about a financial product. Unfortunately, that's the truth today. It's become more uh, assembly line fashion. So if you compare the two scenarios, 500 people are calling you, but you don't remember even a single name, forget the face. But here is another incident that has stayed with you for the last 25 years. So this is the human element that I'm talking about. By no means am I uh, advocating uh, going back to that scenario of 25 years back. But I think there is some question mark that comes up when we say that, when we think, are we accelerating too fast, barreling down too hard down the path of technological advancement? To give you a perspective on that, just imagine this. Imagine if you take the history of money, for example, uh, and if you imagine the last 2,000 years as 1 hour on the clock. If you look at how money was, what was the form of money? Earlier it was coins and tradables. Then it very recently came to currency, and then finally it's now contactless payments or digital money. If you lay out the history of money itself, the format of money or currency over a 1 year, 1 hour time frame, you will find that 55 minutes of the 1 hour, people were transacting in coins. And I'm using coins in a very broad-based way. They were paying for their products for products and services with maybe a silver coin, a gold coin, a brass coin, some physical object. So in 1 hour, 55 minutes, people were transacting in with coins. Somewhere in the last 60 to 80 years in India, for example, we RBI launched the currency note. I think it was 1938. So somewhere in the last 80 years, that 80 years on this 1 hour time frame comes to the last 5 minutes. So in the last 5 minutes on that clock, people suddenly switched over to currency. And we all know what kind of uh, democratization of monetary power that currency can do. Now take it one step ahead, look at fintech. In that same 1 hour, fintech has come in the last 10 seconds only. But if you look at the impact of fintech, it is probably 10x or 50x of what coins and currency notes could have done in the last 59 minutes in that 1 hour clock. So in the 2,000 years of money, or 2,000 years of history of money, people have always been transacting with coins and currency notes, and nothing much had happened in terms of how we transact, how quickly we can transact, how efficiently we can transact, how much in quantity can I transact, and getting past geographical constraints, etc., etc. But look at fintech, what it has done in the last, let's say, 5 to 10 years. In the blink of an eye, it has opened up possibilities. It has opened up uh, efficiency of transactions. It has opened up jobs. It has democratized financial power. So it has done all of this, but at what cost? So I leave you with that question. Are we barreling down the path of technological advancement in financial services and banking? Are we in the sense, are human beings becoming the expendables, so to speak? So I leave you with this question. There is no answer to this. There is no conclusion to this thought. There's no right or wrong in thinking either way. But I think it's fair enough that we uh, remind ourselves of this notion that fintech may be missing the human element, and what could be the implications of that in the next 5, 10 to 20 years. Thank you.
Thank you, Mr. Hemant. That was really a powerful exposition of the role fintech plays in our lives today and how the human element can be cherry on the cake. I now request Mr. Babu Nair, the Managing Director and founder of Banking Frontiers, to share his closing remarks for today's session. Mr. Babu is specializes in catalyzing engagements in the BFSI, Fintech, and financial technology domain. He's an avid networker with solid experience in the areas of publishing and branding. Over to you, Mr. Babu.
Thank you very much. Am I audible to everybody? Hello.
Yes,
Yeah.
yes.
Hello, everyone. Very good evening. And it was really very enlightening session today with a lot of interesting speakers giving various kinds of interesting perspectives uh, into the area of financial services. And the very talk of having this Femvest, which is a very interesting concept coined to empower. I was just reading online from one of the interviews of Nisari on how she planned to keep uh, target 1 lakh women uh, in as a new year resolution to target the to target the women and empower them. Long ago, there was a very interesting quote given by Mr. Narayan Murthy where he said, if you want to plan for today, you try to grow flowers. If you want to plan for tomorrow, grow plants. If you want to plan for a few years, you should grow trees. And if you want to harness for ever million hundreds of years and ever for the future, you should invest into harnessing human beings. And I would like to add one more line to this. If you want to harness the human being, you should also harness the women in the society, because they are the people who are going to educate the future generation and make them, empower them with more knowledge. And empowering these women with the knowledge, with the financial, with the intelligence on financial is a very important step to empower the future generations of human beings. And typically, it is a very good initiative from Femvest to take care of, from Her Money Talks to empower these women with Femvest. A lot of thanks to BSE and all the other partners who have made this a success. Banking Frontiers takes pride in promoting Her Money and trying to uh, create more and more such interesting forums alongside Her Money Talks to empower the women. It was a very interesting talk by Mr. Ganesh Ram, Ms. Lakshmi Iyer, and finally to culminate into a very, very powerful talk on fintech. There is a lot more to be talked about fintech, because fintech is really going to be the future of finance, and it is creating a lot of inspiration for the world of finance. And we would look on to have all of you once again together for this interesting talk of Femvest in our future sessions. Thank you very much, all the great speakers who have really shared a lot of enlightenment through their sessions. Thank you, Team Money Talks, for putting together such a wonderful show and putting together so many interesting speakers. And thank you very much, listeners, who have really made this very powerful with your presence. And we hope to have your participation in the future also. Thank you, everybody. Wish you all the best.
Thank you, Mr. Babu. Okay. Well, it has been a day replete with incisive insights, compelling opinion, and intellectual fervor. As day I come to a close and we look forward to day two, we would like to take a moment to thank our partner organization and collaborators. Her Money Talks would like to place on record its heartfelt gratitude to BSE India, our main event partner, for having helped give shape to our vision of this event, and to CII-IWN for being our channel partner. Next, we would like to thank Mirai Asset, our knowledge partner, for putting their shoulder to the wheel in helping architect the investor education track. Our deep sense of appreciation also goes to Banking Frontiers, our organizing partner, for ensuring that the I's were dotted and the T's were crossed as we brought together all the building blocks for this event. Finally, we would like to place on record our gratitude to all the ecosystem partners, Kerala Startup Mission, Zone Startup India, Vadhwani Foundation, and Startup Orissa, as well as to all our entrepreneurs of India, Women Entrepreneur Network, Indian Institute of Management Sambalpur, Lean In Circle, Startup Times, Iron Lady, Queen, Workjar, Startup 201, We, and Women's Web. Tomorrow's promises to be another exciting day with many more power-packed talks by women leaders in the offing. Tomorrow's session starts at 4 p.m. Indian time, so hope to see you all there. For now, it's a goodbye for all of us at HerMoneyTalks. Thank you.